Hi guys, welcome to E Plus Academic Resource Center where we take online tutorials for undergraduates and senior secondary students. Thank you for subscribing, thank you for the support and everything. Thank you for sharing, thank you for subscribing, okay? Alright, today we're going to be looking at financial accounting and on our TikTok page we have done some background work there. We have done some introduction, okay? So the question we're going to be solving today, I'll display it on the screen. I have the question here with me. I'll display it on the screen for you so that maybe you take a screenshot or something. I'll still drop the copy of the question on our YouTube page on the comment section so that you can have access to it. So just like I said in the introduction stage, we're going to be solving a problem or a question that requires knowledge of the cash book and other subsidiary. In fact, everything we've been doing from beginning, the cash book, the subsidiary books, the ledger, trial balance, everything. This question is going to address all of them and help us understand it the more. Okay, so I'm going to display this question on the screen. I'm still going to paste it on our Facebook comment section of our Facebook page so you can have access to it. Okay, all right, let's get down to work. So the question here is required that the question requires us to write off the 3-column cash book and other subsidiary books. Number 2, post the entries to the ledger accounts. Number 3, balance the accounts at 31st January 2022 and extract a trial balance at that date. Okay, so we are going to start with number 1. If we can't finish up, we'll continue in the next class. Fasten your seatbelts, let's get to work. All right, welcome back. So number 1 says we should draft a 3-column cash book. Say, write up the 3-column cash book and other subsidiary books. So we're going to start with the 3-column cash book. Now, if you want, for your cash book, if you want to write the heading for your cash book, it will be like this. Now, the question says, Mr. Chinedu commences business. So you write, Mr. Chinedu, 3-column cash book for the month ended ended 31st January 2002. This is how your heading should look like. Okay? Then you divide into 2. Okay? Then you have your dates, your particulars, discounts allowed, cash. Okay, sorry, before the discounts allowed, we have the folio, discounts allowed, cash, and bank. Dates, particulars, folio, discounts received, cash, and bank. Okay? All right, so these are 3-column cash book. This is how your heading should look like. Mr. Chinedu, 3-column cash book for the month ended 31st January 2002. This is the 3-column cash book. At the middle, you separate with a thick line. Use a thick line for the middle. Okay? All right. Now let's start. Number one, on 1st January, okay, let me start from beginning. Mr. Chinedu commences business on 1st of January 2002 by transferring 720,000 from his private account into a bank account which he had opened for the business. His transaction for the month of January were as follows. Okay, so he transferred 720,000 to his business account, maybe Mr. Chinedu Limited. Let's put Limited so that we'll differentiate it with business account. Okay, so that 720,000 is the capital, and capital accounts in the cash book you create your debit. This is the debits and this is the credits. You debit receiver, remember the rule, the double entry rule. You debit receiver and credit giver. So you debit bank because bank is receiving this money. 1 capital. Uh, 720,000. Okay, are we together? Okay, 720,000 from his private account into a bank account which he had opened for the bank. So this is 720. Then on the 2nd of January, he withdrew cash for office use. Now let me explain this. He withdrew cash for office use. Let me explain this. There's what we call contra entries. Contra entry is when there's circulation of funds within the business. That the money, the fund is not going out of the business, it's within the business. For instance, you took cash from cash sales from the office, you take it to bank, the same bank account that belongs to the business, or you withdrew from the bank account of the business for office use. So money is still circulating within the business, it has not gone out. So that we'll call that contra entry. Okay, so in this case now he withdrew cash from the bank account for use in the office, not for his personal use. Withdrawing for personal use is different from withdrawing for office use. Please don't confuse the two, okay? They are two different things. You withdraw for personal use or you withdraw for office use. They are two different things. When you withdraw for personal use, it's normal drawings and it will be credited on the cash book. It's normal drawings. Okay, it will be charged on the proprietor's account, personal account, equity, sorry. Do you understand? But withdrawing for office use is contra entry because money is still within the business. It has not gone out. Okay? So now, how do you record contra entry? When he takes from office to bank, you identify which account is receiving. Is it the bank account that's receiving or the cash account? Okay? So bank, debit receiver. So when it takes to the bank, bank is receiving. So you debit bank. You come to debit side. Under bank, you record. So well, let's identify this one now. You say withdrew cash for office use. So he withdrew from the bank. He didn't take to the bank this time. He withdrew from the bank for office use. So receiving now, who is receiving? Office is receiving, bank is giving. So cash is receiving, bank is giving. So debit receiver, you come here. Debit receiver, how much? 18,000. Okay? You put your contra entry sign. Then debit receiver, then credit giver. Withdrew cash for offices. So bank is giving, bank gave. So you come here, 18,000. Contra. What date is that? 2nd. Okay, this is it. All right. Then number 3, sold goods on credit to John. Now, number 3, on the 3rd of January, sold goods on credit to John. Now, credit sales is treated under sales day book. Sales day book. Okay? Credit sales is treated under sales day book. Okay, how am I going to do this? Okay, this is what I'm going to do, okay, so that we'll utilize our time very well. I'm going to use the other side of the board to do our purchase day book and sales day book and other books. Okay, I'm going to use the other side of the board while we use here for the cash book. Okay, so you'll be patient, and the video will be a bit long. So because I'll try and see that we finish the cash book today. All right, welcome back. All right, I have to turn the board so that I have to do this off cam so that to save time. Okay, so let's continue. So on the 3rd of January, sold goods on credit to John, 150,000. Now, goods sold on credit, I told us, comes under sales day book. So you write the date, 3rd of January, goods on credit, John. Okay, how much? 150,000. Okay, good. Now, on the 4th, bought goods on credit from Ada, 180,000. When you buy on credit, when the business person buys on credit, it's recorded under purchase day book. Okay? So you write 4th of January. From who? Ada. How much? 180,000. Okay? Then the next one. Sold goods on credit to Femi. Sold goods on credit to Femi, 220,000. On what date? 6th. Femi, 220,000. Good. Okay, then paid rent. The next one, 7th of January, paid rent by cash. Okay, let's go to 10. We have another bought goods on credit. Bought goods. We'll skip because of so that I'll not keep turning and turning. So let's just identify the sales and purchase on credit and record them. Okay, bought goods on credit. I'm talking about 10th of January now. Check your question, you say it. So let me study the one we are skipping. Paid rent, that is 7th. Okay. Withdraw cash. Okay. Skipping this one. Okay, bought goods on credit from AC. Bought goods on credit from AC on the 10th. AC. How much? 100,000. Okay. Goods returned by John. Goods returned by John on the 11th. Return in what? It's when your customer, people you sell to, when they return your goods, when they return some goods due to maybe bad, some of them are bad or something, when they return to you, it's recorded under return inwards. But when people you buy from, you return to them, it's return outward. Okay? Get the difference. Return outward, return inwards. Return inwards, people, your customers that buys from you. Return outward, people you buy from, your suppliers. Okay? All right, so we have goods returned by John, 17,000. That is return inwards. John is our customer. 11th. 17, John, 17,000. Okay? Then on the 12th, sold goods on credit to Musa, 140,000. On the 12th, Musa, 140,000. Okay? Cash purchase from Musa, paid by check. Okay? Goods returned to Ken. Ken is our supplier. Goods returned to Ken. What date is that? 15th. Ken. How much? 8,200. 8,200. Okay? Then goods on the 16th. Goods returned by Femi. Who is Femi? Femi is our customer. So on the 16th, Femi, how much? 20,000. Then sold goods numbers. Okay. So let me check if there's any other withdraw sold on credit and all that. Okay, receive check, purchase second hand, okay, pay check, goods returned to Easy. Okay, goods returned to Easy on the 25th. Easy is our supplier. Yes, Easy, sorry, not Easy. Easy is our supplier. So goods returned to Easy 25th. We have Easy. Okay. Easy. How much? 5,000. Okay, let's see another, if there's another returned. Okay. All right. Okay, so we have, okay, number on 26th of January, purchase goods worth 70,000 on credit from OK at a 3 discount of 10%. Okay. Okay, we skip on the 1st of January, bought goods on credit from Ken. We skip that part. So I've corrected that. We skip that part. Okay. If you check what we've been doing before, you can, there's a change here. I skipped that part, so I've corrected it. All right. So we have we stopped at on the 26th of January, purchase goods worth 70,000 on credit from OK at a trade discount of 10%. 10% of 70,000 is 7,000. So when you deduct 7,000 from 70,000, you're left with 63,000. So it is that 63,000 that you will record here, not the whole amount, not the 70,000. Trade discount, you don't record trade discount, the discount, you don't record it on the purchase day book or the sales day book. It is the net value that you record. So in this case now, purchase from OK. What date is this? 26th. OK. 63,000. Do you understand? 10% of 70,000 is 7,000. So you deduct 7,000 from the whole amount. The whole amount is 70,000. When you deduct 7,000 from it, you're left with 63,000. It is that 63,000 that you will record, not the whole amount. Okay? Because trade discount, you don't record the net value or the discount. You record the net value. Are we together? Okay. Now let's proceed. Received cash from John in full settlement. Okay, we'll come to that. Then check receipt from Musa. That's cash book. Deposit cash into bank account. That one is cash book. Paid salaries, cash book. Withdraw cash from bank to pay his cons. That one is cash book. Okay, sorry. That one is cash book. Then pay other by check. That one is cash book. Okay, I think we are done with this session. Okay, we're done with this session. So I will turn the board now. Let's continue from where we stop. The cash book. Are we together? Hello, are we together? Okay, so just follow me step by step. That's one thing with cash book and other subsidiary books. Okay, we don't have our board is not that much, it's not that big, so we'll work with what we have. Okay, 15th of January. Let's check 15th of January. Before I turn the board, on the 15th of January, we have cost of goods taken for private use. When we are doing journal proper, I gave us list of transactions that can only pass through the journal. No other books can contain it. They can only come through the journal. And one of it is goods withdrawn. Goods, not cash withdrawn. Goods withdrawn for private use. And goods withdrawn is charged on purchases. You only withdraw what you can see. You only withdraw what you bought. What you withdraw from what you bought. You don't withdraw from what is invisible. You only withdraw from what you bought. So when you have stock of goods or goods you bought, you can only withdraw from it. So goods withdrawn for private use is treated in the journal. And this is how we treat it. So who is giving who? It's chargeable on the, you credit purchases and debit, drawings. Okay? So this is how, let me use this place. I hope you can say it. Okay, so we have particulars, we have debits and credits. Okay, so here we have drawings. Drawings is how much is it that was withdrawn? 5,000. Okay, then purchases 5,000. You debit receiver and credit giver. So the account that is receiving, you debit it. Drawings is receiving because you are taking, you are drawing. So drawing is receiving, while purchase is giving out. Do you understand? Purchases is giving out. You credit giver and debit receiver. Drawings is receiving, purchases is giving out. Okay, so your narration will be being goods withdrawn on 15th of January 2023 for personal use. That's all. This is the journal proper. Journal proper. This is how we treat it. So this is the only transaction on the 15th that will pass through the journal. So we have sales, we have purchase day book, we have return inwards, we have return outward, and we have the journal proper. So this is the only transaction. This is the only transaction that can come under this book. No other place. It cannot be accommodated anywhere else except the journal. All right. So let's continue with the cash book. All right. So we stopped at what date? The second, withdraw cash for office use. Okay, contra entry, as I was explaining. Okay, this should be cash. Let me do it this way. Should be bank contra entry. Okay, isolated by C. So let's leave it like this. It should be cash. Yes. Okay, cash. Yeah. Okay. So now let's proceed. Sold goods on credit, we have done that. Bought goods on credit, we have done that. Sold goods on credit, we have done that. Paid rent by cash on the 7th of January, rents. How much? 2005. Okay, 2005. All right. What else? Okay, withdraw cash from office for personal use, 3,000. Withdraw now, see the difference. The other one was withdraw goods for personal use. So this one is withdraw cash. They are not the same. Okay, withdraw cash from office. Withdraw cash from office for personal use. This is drawings. Okay, on the 9th. Money is, I forgot to explain this. The debit side and the credit side of the cash book are not the same. The debit side represents money coming into the business, cash receipts, cash transactions only. Cash transactions only. The debit side indicates cash receipts, while the credit side indicates cash payments. Payments, when you pay to suppliers, you pay for goods, you pay for stuffs. Okay, money going out of the business. Okay, all right. So drawings is money taken from the business. So money is going out. Drawings, that was on the 9th from office for personal use, 3,000. Office, cash, 3,000 for personal use. Okay, 3,000 from office. Then bought goods on credit. Okay, we have done that. Goods returned, we have done that. So goods on credit, we have done that. So the next one we have cash purchases from Uzo paid by check. Okay, on the 14th, purchases. Okay, how much? 40,000 paid by check. Okay, Uzo paid us by check. Then goods returned, we have done that. Goods, cost of goods taken, we have done that. On the 16th, goods returned by Femi, we have treated that. Sold goods, normal selling price to Akin, giving trade discount of 10%. Okay. On the 17th, I think there's a problem with that question. Let me check that question out. On the 17th, sold goods, normal selling price to Akin, giving trade discount of 10%. Let me check it out, where I got it from. Sorry, I omitted something from that question. Dates number 17th. Sold goods, normal selling price, 20,000. Sorry, I omitted that 20,000. I've corrected it now. 20,000. Sold goods, normal selling price, 20,000 to Akin, giving trade discount of 10%. Okay? So goods sold on credit comes under sales day book. And remember, when you say trade discount has to do with credit sales. I said it in our previous class. Trade discount has to do with credit sales. So they mustn't mention credit transaction before you know that it's credit sales or credit purchases. Okay? Trade discounts of 10%. So 10% of 20,000 is 2,000. So when you deduct 2,000 from 20,000, you're left with 18,000. Okay? So that 18,000 will be recorded here. 17th to, what's his name? Akin. Okay? How much? 18,000. So when you deduct 2,000 from 20,000, you're left with 18. So that 18 is the net value. Remember I told you, trade discount, you don't record the discount value. Okay? You only record the net value. All right? Okay, so that's that. All right, then the next question. Receive check. Okay, I think I'm going to turn this one now. We are done with this part here. Okay, let me turn the board to the cash space. All right, so the next date is 18th of January. Receive check of 95,000 from Femi after he had deducted cash discount of 5%. Cash discount. This one is cash discount, not trade discount. So cash discount comes here. So after he had deducted 5%. Okay, that means he has done the deduction already. So the net 95,000 is the net value. So the discount will come here and the net value will come here. Okay, so 95,000, the net, what date is it? 18th. Okay, what's his name? Femi. Okay, so discount allowed, it's 5,000. Then check. When you hear check, it's bank transaction. Anything check has to do with bank, okay? 95,000. Okay? Now, 20th, purchase second-hand car from, okay, I think some of us might be confused. Okay, how I got the 5,000 is simply do 5% all over 95% times 95,000. Okay, when you do the math, it will give you the 5,000 naira discount. That is how the 5,000 is not indicated in the question. So we have to, this is how you solve, okay, to get the 5,000 naira discount. Just do 5 over 95 times the value, which is 95,000. Okay, all right, so let's move on. So we have the next one. We have 20th, purchase second-hand car from Peck Motors by check. Okay, by check, 100,000. That means he made payment. Okay, so we have 20th, motor vehicle, purchase second-hand car, motor vehicle. Okay, how much? 100,000. Check. Okay, then the next one we have paid check to Ken in full settlement of his account. Okay, this one we'll need to work this one out. We need to work this one out. Okay, let me look for a space so that we'll work this out. Okay, so I've gone ahead to wipe this place off so that we can solve this question. The number dates 21st. Paid check to Ken in full settlement of his account. Remember, Ken is our supplier. We buy from him. So let's say we paid him in full, 110 in full settlement of his account. So let's quickly treat Ken's account and see how we settled him. Ken account. Okay? Dates, particulars, amount. Okay? Dates, particulars, amount. Okay? Now, Ken is our supplier, don't forget. So, let's see. Have we ever bought something on credit from Ken? Yes, on the first, we bought goods worth 120,000. First, purchases, 120,000. Did we pay Ken at any time? Let's see. Okay, Ken, we returned to him 8,200 on the 15th. Before then, did we pay him any money? Okay, we didn't pay Ken any money. All right. Okay, so on the 15th, we returns. How much? Goods worth 8,200. Okay, so now that we are saying that on the 20th, sorry, on the 21st, we paid him on the 21st. We paid him cash in full settlement of his account, 110,000. Okay, now there's something I want you to note here. Don't forget, this is the debit side and this is the credit side. Okay, so this is the total purchase, credit purchase we made from Ken. We return goods worth 8,200, not 82,000, sorry, 8,200. We now paid him 110,000. So this plus this, 110 plus 8,200 will give us 118,200. Then let's deduct it from the total purchase. Okay, minus 120,000. So what we have there is 1,800. So this 1,800 is our discounts. Discounts received. Discount received 1,800. Okay, so in full settlements. So we are no longer owing Ken anymore. That account has been closed. Okay, in full settlement of his account. So we'll now come here, 20th. What date was it? 21st, sorry. Come to our cash book, 21st. Okay, you write Ken. Discount received, 1,800. 21st. Discount received, 1,800 in full settlement. What we paid him by, is it by check or by cash? Paid him check, okay, 110,000. So this is Ken's ledger. This is Ken's ledger. So this is how we settled him. Okay? This is the cash we gave him by check. Sorry, the check we paid him. This is the returns we did to him. So we are deducting it from the total purchase we are owing. Do you understand it? Okay. So let's proceed. Let's proceed. Okay. On the 22nd, cash sales to Taye received by cash on the 22nd. Okay, sales. Let me make a clarification here. When you sell something and the person, your customer, pays you either by check or by cash, when you make sales and you're being paid, there is no need writing the customer's name, indicating the customer's name. No. Do you understand? You only indicate the customer's name if it's owing. If there's a part payment or thereabout, if there's a part payment, you indicate the customer's name so I can easily remember that yes, or make reference to the ledger that this customer is still owing so amount. But once a transaction is closed by cash or by check, there is no need writing the customer's name. Okay? All right. So sales on the 22nd, sales to Taye 25,000 by cash, 25,000. Okay? All right. Okay, so the next one, goods returned on the 25th. We have treated that. Purchased goods worth 17,000 on credit from OK. We have treated that. On the 27th, paid cash of 18,000 to SA after deducting discount of 10%. Okay, 18,000. This is after deduction now. So on the 27th, okay, SA paid cash of 18,000. Now what will be our discount receipt? This is how you solve it. You say 10%. So 10, when you remove 10 from 100, you are left with 90 times 18,000. Okay, this will give you 2,000. Okay, so our discount receipt is 2,000. the way we did this for Femi, the way we treated for Femi, that's the same way we treated for this one. Okay? So please take note of that. This is after deducting, not the deduction has been done already. Do you understand? So we will not do 10% of 18,000. No. We will treat as if the deduction, because the deduction have been done already, because they said after deducting. Okay? So that is how we treat. Then let's continue. The class is becoming too long, but we'll try to round up. Receive cash from John in full settlement of his account. Now, the way we treated for Ken, that is the same way we are going to treat for John. So let me just wipe this off so that we'll treat for John. Okay, all right, John's account. Okay, so in full settlement, John, who is John to us? John is a debtor, is a customer. He buys from us. So receive cash from John in full settlement of his account. So let's come here on the 29th. John. So let's treat John's and see what is left of us. What discount did we allow him? Okay. Did we sell to him on credit? Yeah, we sold goods on credit to him, 150,000 on the 3rd. Sales, 150,000. Did he pay us at any interval? Let's see. He returned goods worth 17,000 to us on the 11th. 11th. Returns, 17,000. So he gave us cash. He gave us cash on this 29th. We received cash from him worth 130,000. 29th. Sorry. 29th. Cash. 130,000. So cash, double entry. You credit, you debit. Cash. Debit entry must have a corresponding credit entry. So credit entry must have a corresponding debit entry. So this is it. This is the cash. Then the discount now. 17,000 plus 130. Let's know what the discount is. Since the question said we paid him in full settlement. Nobody's owing each other. So 17,000 plus 130,000 will give us 147,000 minus 150 minus 150,000. That is 3,000. 29th. Discounts allowed. So we allowed him discount of 3,000. So we come here, 3,000. Do you understand? Is that clear? Do you get it? Okay, let's continue. I just noticed something. Our rent on the 7th was paid rent by cash, 2,500. It's by cash, sorry, not bank, not check, sorry. It's by cash, 2,500. Okay? All right. So let's continue. We're almost rounding up. Okay, so 29th, check received from Musa. Check received from Musa, 50,000. 29th, check received from Musa. Musa, check 50,000. Okay, then on the 30th, deposit cash into bank on the 30th. This is contra entry, 30th. So who is receiving, who is giving? Paid cash into bank. Bank is receiving, cash is giving. Credit giver. Credit giver is 30th. Credit giver, cash is giving. How much? 80,000. Okay. Cash is giving. Let me come again. Deposit cash into bank. So their cash is going into bank. Bank is receiving. You credit giver, cash is giving. Boy, bank is receiving. Cash. Bank. How much? 80,000. So this is contra. Let me indicate it here. Contra. Contra. Okay, you're almost rounding up. All right, on the 30th again, paid salaries by check. 30th. Salaries. by check. How much? Pay salaries by check, 5,000. Okay. Then withdraw cash from bank to pay his son's school fees. This is drawings now, 31st. 31st. Drawings. Withdraw cash from bank to pay his son's school fees, 3,000. Withdraw from bank, 3,000. Okay. Then 31st again, paid Ada by check. Sorry, our board is too small. Pay Ada by check. How much? 80,000. Okay. All right. Pay Ada by check, 80,000. So this, we have exhausted the transaction. Let's see. I think nothing is left. Are we together? Sorry, on that 30th, salaries is by cash, not check, please. By cash. Okay? Cash, 5,000. Not check. Okay? So this is how we balance our account. This is how we balance our account. We add this column and add this column. Whichever side that is greater, we deduct from the other side. We'll add the cash against the cash. The discount, you don't do the discount against discount. You just total it. You don't do it. You don't deduct this from this side. Okay? You just total it. For instance, this one is 3,000, 8,000. So you just put total 8,000. This side is 3,008. You just total it 3,008. Okay? So let's balance our accounts now. So because we don't have enough space here, I'm going to continue up here. Because there's not enough space here. So I'm going to continue up here. Do you understand? It's 8,000. 8,000. 8,000. Remember, we don't do this one against the other side for discounts. Okay? Now, let's add the cash column from on the debit side. We have 18,000 plus 25,000 plus 130,000 plus, okay, that's all. $18,000 plus 25,000 plus 130,000, that is 173,000. So let's note it somewhere. 173,000. Okay, the cash side of the credit side, we have 25 plus 3,000 plus 18,000 plus 80,000 plus 5,000. We have 108,500. So obviously this one is higher than this side. So the side that is lesser, you deduct from it. You deduct it from the higher side. So 108,500. Okay, deduct it from this. We have 173. We have 64,500. So there's no space here, so I'm writing it up here. Okay, let me move this a bit. So we have balance carried down 64,500. Remember this side, the discount received is 3,800. Sorry. Okay, so now let's do the bank side. The bank side. Okay, we have the bank side. We have the bank side. We have 720,000 plus 95,000 plus 50,000 plus 8,000. So we have 873,000. 873,000. Okay, so let's add this side and see what we have. We have 18,000 plus 40,000 plus 100,000 plus 110,000 plus 3,000 plus 80,000. So we have 351,000. So let's deduct it from this. Minus 873. So we have 522,000. 522,000. So these are balance carried down. So you bring down 873,000, then 173,000. Okay, are we together? Okay, from my own solution, I'm getting a wrong figure for this. I made a mistake somewhere. This is 80,000. This is supposed to be 594. 594,000. Okay, sorry. 594, because this one is 80,000. Remember, we have contra here. Where is it? See, it's 80,000. So I went and wrote 8,000 here instead of 80. So here is 80. Please correct it. Here is 80,000 and here is 80,000. So our balance here is 594,000. Our balance carried down from the bank column. Okay, so you rule with double lines. You rule with double lines. So this is how you balance your account. Okay, sorry the video was too long. So in our next class, we'll treat what we just did was the cash book and some of these ledgers. So all these things we have done, please note them somewhere. Get a notebook. Make sure you're writing, okay? In our next class, we'll treat the ledger. After the ledger, we'll treat the trial balance. Let me stop here for now. We'll see you in the next class. Do not forget to subscribe our channel. Invite people. If you're getting value, invite people to be part of what we're doing. That will help more people. Share it. That will help more people to know what we're doing and be part of it. Okay? See you in the next class. Thank you very much.